Hi there, welcome to my YouTube channel. My name is DF Basy, and if you're new to my channel, please kindly like and subscribe to the YouTube channel. So today I'll be showing you how to trade the three ultimate chart patterns. So as a beginner, most times we have issues with identifying chart patterns, identifying the market patterns, the patterns that the candlestick forms, and how to utilize them to make profits. But here in this video, I'll show you the three ultimate chart patterns that can earn you enough profit. With these patterns, I've been able to make a lot of money, a lot of profits. And in this video, I'll be showing you how to utilize them. The three ultimate patterns. There are so many other patterns we have in trading. So diving in, let me write out the chart patterns. So we have the first chart pattern. We have number one. We have you have the head and the shoulder pattern. Shoulder pattern. Then we have number two, we have the double top, double top, the let me put a slash there, double bottom. Then lastly we have the wall triangle pattern. So the three patterns I'll be showing you here is what number one, we have the head and shoulder pattern. We have then number two, we have the double top and double bottom. And we have at number three, we have the triangle pattern. So I'll be briefly in under less than 15 minutes. I'll show you these patterns, how they form, and how to use them to make profits, and how to add them to whatever strategy you're on edge, or how to build an edge around them to make profits. So in the head and shoulder pattern, this is how the head and shoulder pattern looks like, right? We have it like this. So in the head and shoulder pattern, we have this to be our neckline. From here, this is our neckline. We have this to be our neckline. So this is the head and shoulder pattern. So this is why this call this the head. This is basically the head. Then we have the shoulders here. Right, the two shoulders. So it's the head and shoulders. That's hence the name head and shoulder pattern. So now this is the inverse head and shoulder pattern, where you see you have this, you have the head here, and you have two shoulders. So hence the head and shoulder pattern. So what people wait for basically is waiting for markets after the break of the neckline. Most people wait for the retest of the neckline, then they sell in that scenario. Either they sell for this scenario, for this particular scenario here, they'll sell. Then for this scenario, they'll be looking for a buy, start at the neckline, and then they buy. Take a buy position for this scenario over here, right? So this is the head and shoulder pattern. Then we have the double top and double bottom. Let me show you how the double top and double bottom is. This is just, this is it. Double bottom. And this is a what? A double top. So your ability to understand these patterns and utilize them in the market, hence will give you an edge on how to trade them. So you have this to be you have the top, this is the double top, then you have this to be our double bottom. You have this to be our double bottom, right? Then lastly, you have the triangle pattern. So it's either bullish or bearish, but any which one, once you wait for the break of the triangle, you can determine the direction of the triangle of the market. So you have something like this. So you have territory range, like forming a triangle, and a break, they have a retest, they have market move. Or I think this should still be here. So I can have a break. Yeah. All right, so this is it. Okay. So this is the triangle pattern. So you have two patterns. We have the ascending triangle and the descending triangle pattern. But basically this an analogy of how it looks like. You have the break. Once you have the break, you have the retest. They have market buying to the upside. Either market is buying to the upside or market is doing what? Will be selling, right? So this is the triangle pattern. So now, your ability to understand how these patterns are represented in the chart, the live chart, and ability to understand how to use them and what confirmations to use while trading them. It's what will give you profit and make you profitable in the long run. So let's dive right into the chart and try to identify these patterns and possibly how I would trade them, right? So now for the double bottom and the double top. So now let me break to the 1 hour time frame. So now I can spot a double bottom here. So now this is basically a double bottom. You have here, you have this low, you have market coming back to this low. It's more like what I drew earlier. Have market do this. You can see it, our double bottom. So we have a low like this and you see market rejecting the double bottom. How do you trade this double bottom? How do you engage? How would you set your entries, set your stop loss, etc. So now what happens is, let's say market hasn't formed from here. From here, there was nothing here. But you have market has played out to about here. And you see that market is respecting this bottom here, right? About to create a double what? A double bottom. What would you be looking for? You'll be looking for entries here. Candlestick confirmations. So I don't know if you know of your candlestick confirmations. You have the engulfing, you have the you have the engulfing, you have the hammer, you have the morning star and etc. So basically I'm looking for my engulfing. And I also want to see price reject at this point. So now I can see that market tapped and rejected. And what will I be looking for? I'm looking for a pullback or a of change of character, or should I say market structure shift, or change the state of delivery. So basically here I can see my change the state of delivery here. I use this as my change state of delivery. And what is basically the change state of delivery here? Change state of delivery is just like the first break of structure, right? Let me break down to 15 minutes here to look clearer. So you can understand. If you don't understand market structure, you can go to my videos. I have videos on market structure. You can go there and you learn and have basic and in-depth knowledge on market structure. So now the first block of structure is this. This is the first block of structure. There's a block of structure here. This is a block of structure, but it's still inside this zone. This is the first block of structure. Then this other one's, but this one was clearer. So after the block of structure, what will I be waiting for? I'll be putting my limit here. I'll be taking my buy here. My SL below here. What am I targeting? 1:3, right? Which market eventually did that? 1:3. Did that and more. So this is at least it gave 1:6. So if you risk $10, 1:6, that's $60 plus. $64 we'll be making on this trade. Just using simple candlestick chart patterns, a double bottom. Markets dropped, tapped at the double bottom here. The next you have the buy to the upside. So basic understanding of this simple stuff with a little bit and a confirmation and back testing. Now, like, also notice that it's not also just learning and having these informations. You have to back test them to understand and know how they work. Do you get me? So now we're going to, this pattern also works flip way. So now this is what, because I was told you guys I'm going to use 15 minutes to show you this. I'm trying to rush up. So looking at this, this is a what, a double bottom. Double, sorry, double bottom. Looking at this, this is a double bottom. But if you flip it upside down, inversely, it becomes a what? A double what? A double top. So the entry model I showed you still works same way with this chart. This is double top, market taps in and then sells. Right? Let me try and see if I can identify another double bottom or double top. I can align with what I'm trying to show you. Um, think we can find something. Yeah. So I've seen another. So now this is a block. Can you see this? This is now a double top. This block, yeah. Market came, tapped. Now we have the first pinpoint here. This is your point A. Let's say this is your point A. This is your point A. Now market comes to point B. What does it do? It rejects this point B, taps close, and gives you an engulfing. So normally you break down to the 1 hour or 30 minutes time frame. This is the 1 hour. And what can you see? You wait for your candlestick confirmation. So now, what is the candlestick confirmation? There's no clear candlestick confirmation here. So let's say we want to use our what? Change in state of delivery. First break of structure, market retesting that, and then we buy. So what do we have here? We have our first break of structure here. Once we have our first break of structure, what we're looking for, we're looking to set our limit within this zone, taking a sales from here. So this is it here. Change the state, expecting markets to pull back to this zone. That's the first break of structure. Market didn't really break it well here, but this is the break and market pull back here. So where will you be entering from? This is where you'll be entering from. Your limit to be set here, and then your sell limit, your SL above. What you'll be targeting? You'll be targeting 1 to 3. So I think at least market did that. Market did 1 to 3 plus. Hold on. Okay. Market didn't do 1 to 3, but at least it gave us 1 to 2. So with this, you have made profit. Can you see how clear it is? Market dropped, it dipped, gave you clean profit. Now, normally, some other traders will enter aggressively from this double top. Once they see an engulfing, they will enter, execute the trade, keep the SL below, and still take the trade. But I prefer seeing a lower structure, market structure shift, change state of delivery. That's, forget about all the names. Change state of delivery is just basic market structure shift or basic SMC concept. Call it change of character. So once you see that, you execute your trade and you're good to go. Then moving over, this is a double top. This is a double top. Look at it closely. Follow me. You have this, the first drop, the second drop, touching it, then it drops down. Right? So that's a double top. So I've shown you guys a double top, and then I've shown you guys a double bottom. So now, what's the next chart pattern we'll be going to? The next chart pattern we'll be going to is a head and shoulder pattern. So now the head and shoulder pattern is very common, and it's almost appears in the chart everywhere. So now if you can look closely, we have, hold on, let me clear this. So if you can look closely, we have one here. This is the head, and this is the shoulder. This is the shoulder. Can you see how beautiful it is? Head and shoulder pattern. Beautiful head and shoulder pattern. What would I take as my neckline? This will be my neckline. I'll use here as my neckline. I'm using BTC chart. This is real current markets. This is real charts, live charts. Our market is still moving currently. BTC is dipping currently. So this is live chart. So I'll be expecting if market pulls back to this neckline, I'm expecting to short. I'm looking for shorts there. But let me go to the 1 time. I've seen another head and shoulder pattern below there. Okay, this is another head and shoulder pattern. Now, there's one thing, listen to me. There's one thing so special about this head and shoulder pattern because we have the smart money concept traders, we have the retail traders, then we have the ICT traders, we call it inner circle traders. ICT is basically just SMC, but a little bit of technicalities and in-depth knowledge about them, and they change a little more some words. Like imbalance is called fair value. So like fair value gap in SSC, in United States is called imbalance. But let's look at this. The head and shoulder pattern is something that's arguably seen the same way cut across all um trading ideology or trading terms, or let's say trading basics or formulas, because like the retail, the SMC, the ICT are all strategies that are based on one formula, one perspective that later on, if you dive in, you have to focus and create something out, create an edge or strategy for yourself. So this is our head. This is our head over here. These are shoulders. These are two shoulders. So if you look closely, where is your neckline? Now closely, if you want to take a neckline, I'll be taking this as my neckline. Taking the whole of this area as my neckline. Then what did after market broke out of the neckline? What happened? It retested the neckline. Yeah, as it retested here, what do you see closely? You can see a bullish engulfing. So what will you be taking? Taking buys. Taking buys from here, targeting 1 is to 3, keeping your SL below the engulfing. And you can see market gave exact 1 is to 3. Then if you watch my video on order block, you can see that the candles here, the market came back to an order block here. If you go to your 4 hour, you see the order block and it took a buys from here and continued the trend. Right. So this is a head and shoulder here. That's a head and shoulder. So proper use of that can make you profit. You see why I set my stop loss is some what I use as confirmation. Now, in this particular trade, head and shoulders, you don't really need to wait for market structure shifts. Depending on where you find the head and shoulder. If you find the head and shoulder on the higher time frame, like daily, that's where you need to break down to your 4 hour, 1 hour to see that market shift. But if you're on your 1 hour and you see this, you can execute using your candlestick patterns and it will work perfectly well to serve you well, right? So another, let me look for head and shoulder pattern. Um, so now this is like an inverted head and shoulder pattern. This is the one that's upside down, the one I just showed you guys now. Let me look for another one. Okay, okay. I've just seen one now. Head and shoulder pattern, and mind you, these patterns are they print on the chart daily, and is ability to backtest and understand them and build your ability to identify them that will make you see these setups and these opportunities and leverage from them and make profit. So without further ado, this is my neckline. I can see this as my neckline because I have this. This is my head. This is my this is my right shoulder, and this is my left shoulder. Right? So this is the neckline, right? This is the neckline. Let me not use rectangles this time. Let me just use a pure line to draw it. Cut it out. This is my neckline. So what did you see? Price came back, we tested that neckline and sold. And you tested it twice. So now, let's say you wanted to take from the first touch here, which is around here, where you can use your candlestick. If you look closely, you can see some candlestick rejections here, rejections on from the candlesticks around here. So rejection, if you look closely, you can see your what your morning, your evening star, right? You can see your evening star. The evening star, yeah. It's like you're engulfing also here. So even I'll be entering from here. I'll be entering from here. My SL are both the engulfing. What I'll be targeting 1 to 3. Or can you see market did 1 to 6? With this, you can be making profit. Market came back to the neckline again. What do you do? Market came back to the neckline. You executed again. Keep your SL at the same point. I still made 1 to 6. So imagine you reach $10 here on 1 to 6, you get $60. Reach another $10, you get 1 to 6, you get $60. How much is that you've made? $120. Just simply understanding candlestick chart patterns, market chart patterns, just as simple as this. As simple as this. So this is a head and shoulder pattern. This is the normal head and shoulder pattern. You have the head, and write this out. You have the head, you have the right shoulder, then you have the what? The left shoulder over here. Right? So you have the left shoulder over here, you have the right shoulder, you have the head over here. So if you can go back test this, you see that you can use this to make a lot of profit, a lot of profit from the market. Then lastly, what else to show you? I also show you your triangle pattern. So the basic triangle pattern I showed you guys, this is how it is. Comes this. Have a break, then you have a buy, right? Then you have something like this. We can retest, then you buy, right? This is basically how it is. So let me put the chart and show you how it works, how it looks like. So which chart will I use? I'll have to leave BTC. I'll be looking at um this still BTC. Um I'm looking at let's look at odd USD. Okay. Looking for a chart. Um I think I'm gonna see it here. Should be here. Should be here. So you need to also train your eyes to be able to identify them on time and learn how to use them properly. So we have one here. You can look where you see it. We have one here. Have this. Then you have this. Can you see this? Though this didn't retest properly to touch this before we buy, but let's leave that aside for now. Let me look for something else. This triangle pattern is actually really, really scarce. I think it's mostly plays out and it's mostly shown uh on the 15-30 minutes time frame. The 15-30 minutes time frame. I'm looking at real data now. All right, we have one here. Very clean. I think we have to break down. Okay, we can do it just here. Can you see this here? All right. So you see market touch, it touches here. You have a touch here. Market touches there, touches there, touches there, touches here, couple of times, couple of times. Then what do you have? Market does this. It breaks out finally. Then what does it do? It goes back to the test before buying, right? So now what would you, hold on, what would you do here? After market does this, after the break, you'll be expecting market to retest the zone which it broke. So this is the zone which it broke. So we're marking out this zone. Then what would you expect? Is that to touch this line, though it didn't touch this line perfectly, but it came close and you have block here which it broke. So what you'll be looking for, you'll be looking for your engulfing, either your bullish engulfing, your candlestick patterns for confirmation. So we have one here, we have an engulfing here. So you'll be entering from this engulfing here, the SL below, be targeting 1:3. A market even did more than that. Market did close to 1:6. So imagine, see the ring rate you'll be having. This candlestick patterns alone can just increase your ring rate and you make it profit. So this alone with 1:6, you can make, if you risk $10 here, you're making $60. If you risk $100 there, you're making $600 on that trade. So with just simple and basic TA and chart patterns, you can make a lot of profit. You don't need a lot of fancy stuff on your screen and all, right? So that's it. Let me check if I can see another one that will be helpful so that all you need to do is just do your basic study. Once you find something, you study. Once you get something, you study. I can't really find something here again. Let me check. Um, Hold on. Let me check. Your card, right? Click your card. You're prone to have this setup form. If you can just look at this chart now, you can see I've spotted the head and shoulder pattern here. This is the shoulder, this is the head, this is another shoulder, inverted head and shoulder pattern. This is the neckline. What the market do, came back, retested the neckline, and then we have a what? A massive spike. This is the neckline, and you have massive spike, breaking structure here. So with this, you can have, this is like 1:7. Let's be realistic with our SL. Basically have 1:6 again. Huge win rate. Huge win rate. Um, Still looking for something. No, it's not clear enough. I'm looking for something that will be clear enough. We can. Okay. I think I have one here. This is it. Then I have this. I have to take it from here. I have to here. What did market do? After market closed fully below, market retested here. You have a sell, a drop. So now we'll be looking for your engulfing, which I can see an engulfing over there. If your SL below the engulfing, what are you targeting? Targeting 1:3. And this 1:3 market even did 1:4. Hits TP before changing direction and breaking the highs. And you have something over here too. Let's see, I'll use this. I have this over here. Still on the triangle uh pattern, chart pattern. So you have this. What do you expect market to do was retest this neckline. Market didn't come back to retest this neckline, but you have what? A block here. Like, let's say you want to use this as a breaker. Yeah. All the market do, you tested it. Then you can sell from there. What you be waiting for at that blow? You're looking for your confirmation, the candlestick confirmation. Right? You're looking for your candlestick confirmation. And when you see your candlestick confirmation, I see an engulfing here. So I take after the engulfing is formed, take the trade, keep my SL above. And where am I targeting? Hold on. What am I targeting? I'm targeting 1:3. But in this is like market did 1:2 ball. Fine. Profit is profit. With this, and ensure that once you take your trade and market moves 1:1 in profit, you break even your trade. So with this, you can have a higher win rate and you can be profitable as a beginner trader. So all you need to do is just study, study, study. And once you can study, you can identify all this on the chart. So with that said, I'm done. We are done with the video. Kindly like and subscribe if you learned something. If you have any questions, you can drop them in the comment section. I'll be answering any questions you have. So please like and subscribe and share the videos to as much people as you can. All right, I see you, man, DF Basy.